Understanding market structure is crucial for trading and investing, and in this video, I'm going to break down what market structure is and how to identify it to use for your advantage. Before we get into it, if you could like and subscribe, that would mean a lot to help me grow. Now let's dive in. Market structure, in simple terms, refers to the way in which prices are determined in a particular market. It's about understanding the interactions between buyers and sellers and how they influence price movements through trends, patterns, and support and resistance to identify uptrends and downtrends. So let's illustrate this with a very simple example of market structure. When looking at this chart, for example, you can see here that price is trending up, making higher highs and higher lows based on the previous lows and highs respectively. Continues making higher highs, higher lows, and higher highs, and then suddenly we get a break below this higher low level over here, taking it out. So now we're starting to make lower lows. Lower highs, lower lows, lower highs, and lower lows. So you can see here, the market was clearly on an uptrend. As price was moving higher, it was consistently taking out the previous highs that it made and making higher lows, indicating that buyers were in control and price was moving higher. Then, once we break below this low over here, this is what we'd call a break of structure. And what this means is that the market is sort of uncertain, or sellers are starting to take control, indicating that there's downwards pressure in the price. And as we could see, we start making lower lows, lower highs, and so on. Now to use a realistic example, let's look at the USD JPY pair. You can see at the start here that we start making higher lows and higher highs as the market's trending up. This happens for quite a while, and you can constantly see that the previous resistance or high level gets taken out as price trends higher and continues to make higher highs. So everything's well and green until suddenly over here we get this lower high. So this might be an area where you're wondering if we're going to start seeing a reversal. It's still not too early to say whether that's the case, given we do actually make a higher low here, but this is where you would probably not be taking any trades and you'd just be watching. Then again, we get a lower high, another lower high, and suddenly over here we get this break of structure below this higher low. And there's another one actually over here, but I think this is a more significant one. So once we get this break of structure, you can see the market starts its downtrend. So we have lower lows, lower highs, lower lows, lower highs, lower lows, and so on. So this is a realistic example of how you can actually look at identifying market structure and identifying the market trends and which direction it's going. Now, this is done on the hourly chart, and we'll go into why that's important right now. So the reason that time frames are super important when you're looking at market structure is because the current chart that you're looking at, in this example we're looking at the 1 hour chart, is showing us the market structure on that particular time frame. So we can see here on the 1 hour chart we were trending up and trending down afterwards. However, I will show you what it now looks like on the 1 day chart so we can get a better idea. So I've swapped this over to the daily chart, and I've kept all these indicators of higher highs, higher lows completely the same. So you can see that on the daily chart as well, this is showing the exact same story. And you can clearly see that higher highs are being made along with higher lows, and you can see the direction of the current market. So what it's good to do actually when you're trying to look at market structure is to look at different time frames. So if we started on the 1 hour chart and we identified the market structure we saw before, you can check the daily chart as well to see that this is actually going in the same direction. What people often do, which is a mistake, is they take a very short time frame, for example, say the 1 minute or 5 minute chart, and they think that they see what actual market structure is occurring. But in reality, the longer time frames, such as the hourly, daily, and so on, they actually show a much clearer picture of what the current market is doing and what the market structure is doing. So it's important to know that the longer time frames actually have a clearer idea of what the current market structure and market price is doing. So with the current market structure we've been looking at, this is actually quite a simple one which has been showing a clear direction and trend. So what I'm going to do now is try and find one that's a little bit more complicated to show you what common mistakes people might make in thinking that they know the right market structure and then getting burnt because it goes the other way. Now here's a more complex example I found on the JPY Euro. So you can see that we have a nice downtrend here with the market making lower highs and lower lows pretty much uncontested all the way down to here. Then suddenly we bounce up, bounce back down, so we're making higher highs and higher highs again. So some people might think that this is where the break of structure is we actually see this high reach up here, which is above this low that we saw earlier. So you might get fooled into doing a long trade up here. And as you can see, this price just rejects all the way down, making a lower low and bouncing off the support level. So this is why it's also important to incorporate support and resistances into this trade. You can see that there were 3 times during this time period where the price bounced off the support level, and this is actually where the floor was for the market to start trending back up. So if you made the common mistake here, again, we had higher highs, then we bounced back down, we had lower highs. So you might be thinking as we start retesting down here that we're going to break through and the market's going to continue this downtrend. You'd enter your short position around here once we reach the support level, thinking it's going to break through, and you're wrong. Suddenly, the market starts going back up. We see higher highs, lower highs, and higher highs, and then it continues to go upwards. So it's important to incorporate support and resistance when you are actually looking at this market structure, because these are key levels of demand and supply for traders and investors. The final tip I would say is to really focus on the longer time frames when you're trying to do market structure analysis. So the 4-hour, even daily chart, and I guess you could argue even the 1 hour is probably the best to use when you're trying to actually find the market structure. If you use those shorter time frames like 15-minute, 10-minute, or even 1 minute, those are very noisy. So whilst you might think in those shorter time frame candlesticks that they're showing you what the market structure is doing, it's not actually painting the overall picture and direction of the market. So in this example, if I switch this to the 1-day chart and scroll over here, you can see that what we were looking at was just this portion. But on the bigger picture, we actually have a very consistent downtrend. So if you were planning on taking this sort of scalp here, that would have worked out for you if you thought that we were seeing a reversal, which was the case, as we did see higher highs about 3 times. But in the long time frame, the daily candles, you can actually see we never actually broke above this candle right here, which was the lower high. So this actually told you that the market was actually still in a downtrend. And that is what happened. We continue to trend down and we're just still going all the way down. So there are a lot of traps that new traders like myself will fall into, thinking that they know what the market structure is doing. So the best 2 tips I could say is focus on the longer time frames. This can also help in your day-to-day trading, even on shorter time frames. If you know what the overall market structure is doing, that might incentivize you to take a trade. For example, in this case, if you see the market structure is going down and you get a setup to sell, you might be even more inclined to do so because the market structure is going in your favor. And secondly, I would incorporate support and resistance levels whilst you're looking at the market structure, because these will be interesting levels for bounces or breakthroughs, and sometimes you might even see the market structure change at those levels. So I hope this was helpful. Again, this was a relatively new beginner's guide as I'm still learning this stuff myself. But if you did find this helpful, please like and subscribe, as it'll really help me out. And yeah, I'll keep you posted on my trading journey and what I learn. Thanks.